Did you know, from the 1890s up to 1970s, the price for a bottle of Coke didn't change in the US? Yep, there was a time that price didn't change much for years, even decades. Now, it's just accepted that price keeps rising due to inflation. In this video, we'll discuss inflation, how it works, and how people earn from inflation. Let's start with the story of a Coke bottle. From the 1890s, the Coke company started selling their drink, and up until 1970s, the price didn't change much for almost 90 years. How? Because the inflation on those times was low and was capped due to the gold standard. What is the gold standard? When a country is in a gold standard, their money is exchangeable to gold, which means for every dollar bill released, it is backed by gold. But in 1971, President Nixon removed the US from the gold standard. And the result? The US government can now print unlimited dollars. And oh boy, they printed alright. 24/7 the money printer is running, which only has two settings: fast printer and a slow printer. Let's check this chart on what happened to the supply of money after the 1970s. This is the result of unchecked money printing. CPI, or Consumer Price Index. This is the inflation that we usually hear about, sometimes 4 to 5%. This is a basket of goods that people usually buy, like meat, bread, and milk, etc. But the CPI is not the full story of inflation, because it's just only a part of the items in the economy. Monetary inflation, or currency debasement. This is the true inflation, because this is the new money added to the system. An analogy for the effect of the debasement is a coffee that you want more cups, so you keep adding water. And the result? More coffee, of course, but you would need to drink more to wake you up. An illustration for what happens to the new money on currency debasement is there is a CPI basket on top, and the new money on the system flows here first. Once it's paid, money can now flow to the goods people want, like a house, car, a Rolex, or jewelry. Sometimes to a good school for a child, or investments, which can be Bitcoin or stocks. These items on the bottom usually rise, or more often beats inflation, because the remaining money flows to them after the common items has already been paid. Now, let's offer some seconds of silence for the money we lost due to the inflation. People with money somehow in their mind know about inflation. That is why they held assets, to avoid or even benefit from inflation. Business. A business sells a service and or items that when inflation hits, these services and items just increase in prices with inflation. Real estate. This is important to most, if not all, people to live in. That's why most rich people tend to park their money on real estate. And the gains on real estate is even more on a good location. Gold. Since the old times, gold was important. It's even more valuable with a limited supply, and you need to dig it from the ground. Bitcoin. This is a new asset class to store your capital. Its qualities: you can divide one Bitcoin so many times, equals you can use the asset even if you have low or high capital. It runs 24/7 on the internet, and you can send it to anyone on the world. It's guarded by math and algorithm. Math is undefeated because it can't be cheated or coerced. Limited supply. Only 21 million BTC can be printed. Let's compare the old inflation assets versus Bitcoin. It's helpful to view a business as a machine that you fix and improve to provide you with money. It depends on how good you are and your team to improve it and to provide more money. BTC is kind of similar, but with BTC, it's not only you, but you have all the people, business, even countries that believe in Bitcoin, each helping to improve and increase the value and security of Bitcoin. Real estate versus BTC. If you have a good location, for sure you will beat inflation using real estate. But the problem is that you can easily divide your house or condo. And if it's in a really good location, you would need a large capital to invest in it. BTC is easily divisible. You can invest in it even if you have a small or large capital. Gold versus BTC. Gold is called God's money, since it was important since the old times. But since gold is a physical object, it's not easy to store and has an upkeep. And if you want to move it or sell it, you would need a truck, a boat, or even a plane for this task. BTC, you can literally hold it in your mind because the keys are just words you can memorize. And it runs 24/7 and you can buy and sell it to anyone around the world. Thanks for listening. If you reached this point on the video, shoot me an email or leave me a message on my bot here. I would love to hear from you. Bye-bye.